United Texas Bank wins OCC national charter, gets direct Fed access. United Texas Bank, a Dallas lender that clears roughly $10 billion a month in payments for crypto firms, has completed its conversion to a national bank under the Office of the Comptroller of the Currency. The change gives it direct access to the Federal Reserve's payment rails. CEO Scott Lenoir told CoinDesk in remarks circulated by CoinMarketCap on May 28, 2026. Source: the headline matters because of what it replaces. Until now, almost every crypto-focused U.S. bank operated under a state charter, often Texas or Wyoming, and reached the Fed indirectly through correspondent partners. United Texas Bank now sits inside the OCC perimeter and holds its own line into Fedwire and FedNow. That is a structural change to how dollars move between exchanges, stablecoin issuers, OTC desks, and the rest of the banking system. A direct line to Fedwire instead of a correspondent middleman. A correspondent setup means crypto-serving banks have to route payments through a larger partner bank, which can throttle, delay, or repurpose those flows at will. The 2023 collapse of Silvergate and Signature left the sector with a thinner roster of willing partners and made every remaining correspondent relationship leverage for the larger bank. Direct Fed access removes one of those gatekeepers from the chain. For crypto firms holding operating accounts at United Texas Bank, that translates into faster settlement windows and fewer dependencies on a partner bank's risk committee. About $10 billion a month is already moving through these accounts, which puts the bank in roughly the same monthly throughput range that Silvergate's SEN network handled at its peak before the run. A national OCC charter is the harder bar state-chartered banks can serve crypto clients, and many do, but they have always been the easier target for political pressure during episodes like Operation Choke Point 2.0. National charters are issued by the OCC, supervised under federal law, and harder to dislodge through state-level lobbying. They also carry a heavier capital and compliance regime, which is the price of admission. The OCC under Acting Comptroller Rodney Hood has spent the past year clarifying that national banks may custody crypto assets, hold stablecoin reserves, and participate in distributed ledger payment networks. Approving the conversion of a bank whose entire deposit base is crypto-adjacent is the practical test of that posture. It is one thing to write a guidance letter, it is another to charter the bank. Stablecoin issuers and exchanges get a durable counterparty. Stablecoin issuers in particular care about which banks can hold their reserves and settle redemptions. The Genius Act framework, advanced through the FDIC's stablecoin AML rule earlier this month, leans heavily on the assumption that issuers will hold reserves at federally supervised banks rather than offshore. A national charter for a bank with deep crypto plumbing experience gives issuers a U.S.-domiciled, OCC-supervised option that was not previously available at this scale. Exchanges with U.S. operations face the same calculus. Coinbase, Kraken, Gemini, and the larger OTC desks all need banking relationships that can clear large daily volumes without being throttled. A bank with a direct Fedwire line and an OCC charter is a more durable counterparty than a state-chartered partner relying on JP Morgan or BNY Mellon for the actual movement of dollars. The macro backdrop, the news lands during a weak tape. As of May 28, 2026, BTC is trading at $72.39, down 3.7% on the day, while ETH is at 1976, down 4.7%. The Crypto Fear and Greed Index sits at 31, in fear territory. None of that changes the structural story. A national bank charter is not priced into spot any more than the Fed master account decisions for Custodia or Caitlin Long's prior Wyoming push ever were. The effect runs through plumbing, not price. What it does change is the negotiating position of every crypto firm that has spent the last 3 years being told its accounts are too operationally risky for a Tier 1 bank. There's now a federally chartered alternative with the volume to handle them.